Question 1. Which of the following is the most critical factor when underwriting a cyber insurance policy for a small to medium-sized business (SMB)? A. The business's annual revenue. B. The cybersecurity posture of the business, including technical safeguards. C. The number of employees within the organization. D. The geographic location of the business. Answer: B. The cybersecurity posture of the business, including technical safeguards. Explanation: when underwriting a cyber insurance policy, especially for small to medium-sized businesses (SMBs), the most important consideration is the cybersecurity posture of the business, which includes evaluating the technical safeguards in place. This encompasses aspects such as firewalls, encryption, employee training, and other cybersecurity measures. Insurers assess these elements to gauge the risk exposure of the business. Although revenue, employee numbers, and location can influence risk to some extent, the strength of a company's cybersecurity controls plays a crucial role in determining the level of risk and, consequently, the premium. The business's technical safeguards are directly linked to the likelihood of a successful cyber attack or breach, making it the most important underwriting factor. Question 2. Mr. Thompson is a business owner in Alaska who recently experienced a data breach involving customer information. After discovering the breach, Mr. Thompson contacted his insurer to report the incident. What should Mr. Thompson do next in line with standard claims procedures for cyber insurance in Alaska? A. Wait for the insurer to notify him of the next steps. B. Immediately contact affected customers and offer free credit monitoring without consulting the insurer. C. Hire an independent cybersecurity firm to investigate the breach without notifying the insurer. D. Provide all available information to the insurer and follow their instructions on documentation and further actions. Answer: D. Provide all available information to the insurer and follow their instructions on documentation and further actions. Explanation: in the event of a data breach, it is crucial for policyholders like Mr. Thompson to follow the standard procedures outlined in the cyber insurance policy. The first step is always to notify the insurer immediately and provide all necessary documentation related to the breach. This can include logs, evidence of the breach, and any initial internal investigations conducted. The insurer will guide the insured through the claims process, which includes recommending appropriate incident response steps. While Mr. Thompson may want to contact affected customers, he should wait for guidance from the insurer before offering services like credit monitoring, as this could affect the policy's claims process. Hiring an independent firm without notifying the insurer may complicate the claims process, as insurers often have preferred vendors or protocols for handling breach investigations. Question 3. Which of the following is the most common exclusion found in cyber insurance policies regarding ransomware attacks? A. Coverage for costs associated with business interruption. B. Coverage for damage to physical property. C. Coverage for data recovery from affected systems. D. Coverage for lost revenue during the ransom payment process. Answer: B. Coverage for damage to physical property. Explanation: ransomware attacks typically involve the encryption of data and the demand for payment in exchange for the decryption key. Cyber insurance policies typically cover first-party losses like business interruption, data recovery costs, and sometimes the ransom payment. Depending on the policy, however, the damage to physical property is generally excluded from coverage, as ransomware primarily affects data and digital infrastructure rather than physical assets. Many policies may exclude physical property damage caused by cyber events because such damage is typically covered under general property insurance, not cyber insurance. Therefore, businesses affected by ransomware are more likely to see exclusions related to physical property damage, making option B the most accurate answer. Question 4. Which of the following would be considered an uninsured risk in a typical cyber insurance policy? A. Data breach involving personally identifiable information, PI. B. Costs associated with restoring lost data from a cloud provider. C. Cyber extortion payments for a ransomware attack. D. Losses due to failure to comply with state-specific data breach laws. Answer: D. Losses due to failure to comply with state-specific data breach laws. Explanation: cyber insurance typically covers financial losses resulting from cyber incidents like data breaches, cyber extortion, and data loss recovery. However, losses resulting from non-compliance with state-specific data breach laws are generally excluded. This includes fines, penalties, or legal fees arising from regulatory violations. Insurers typically do not cover regulatory penalties, as these are considered the insured's responsibility for failing to comply with relevant laws and regulations. Therefore, option D is the correct answer because regulatory violations are typically excluded from coverage, unlike costs related to breach events themselves. Question 5. Which of the following cybersecurity frameworks is most commonly adopted by businesses when assessing their cybersecurity risk and is also recognized as a standard by many cyber insurers for compliance and risk management? A. ISO 27001. B. NIST Cybersecurity Framework. C. General Data Protection Regulation GDPR. D. California Consumer Privacy Act CIPA. Answer: B. NIST Cybersecurity Framework. Explanation: the NIST Cybersecurity Framework is widely adopted as a standard for assessing and managing cybersecurity risk, particularly by businesses looking to obtain or renew cyber insurance. This framework provides comprehensive guidelines for protecting critical infrastructure and is recognized by both U.S. regulators and insurers. Insurers often favor companies that follow NIST's guidelines because they offer a structured approach to identifying, assessing, and mitigating risks. ISO 27001 is also an important cybersecurity standard but is more focused on information security management systems, while GDPR and CCPA focus more on data privacy rather than cybersecurity risk management, making them less relevant in this context. Question 6. A healthcare organization in Alaska has recently suffered a cyber attack resulting in the exposure of confidential patient data. Which of the following coverage features would most likely apply to this situation under cyber insurance policy? A. Business interruption coverage. B. Coverage for cyber extortion demands. C. Coverage for legal and regulatory costs. D. Coverage for physical property damage. Correct answer: C. Coverage for legal and regulatory costs. Explanation: healthcare organizations are subject to strict data privacy regulations, including the Health Insurance Portability and Accountability Act (HIPAA). If patient data is exposed in a cyber attack, legal and regulatory costs are significant. Cyber insurance typically covers the expenses associated with defending against legal claims, including regulatory fines and legal fees related to HIPAA violations. Coverage for business interruption, option A, and cyber extortion, option B, may also apply, but the key concern in healthcare breaches involves potential lawsuits in compliance with data privacy laws. Physical property damage, option D, would not typically apply in this situation as the attack involves data, not physical assets. Question 7. What is the primary purpose of conducting a cybersecurity audit during the underwriting process of a cyber insurance policy? A. To estimate the potential premium cost for the policyholder. B. To evaluate the cybersecurity controls and identify vulnerabilities. C. To comply with federal data protection regulations. D. To calculate the potential legal fees in case of a data breach. Answer: B. To evaluate the cybersecurity controls and identify vulnerabilities. Explanation: a cybersecurity audit is a crucial step in underwriting a cyber insurance policy. The primary purpose is to evaluate the insured's existing cybersecurity posture, including the controls and measures in place to protect against cyber risks. Auditors assess vulnerabilities, risks, and the effectiveness of security policies, which helps insurers determine the level of coverage needed and the appropriate premium. While premium estimation, option A, is influenced by the audit, it is not the main purpose of the audit. The audit is more focused on identifying potential weaknesses and ensuring that the policyholder's cybersecurity practices meet the insurer's requirements for coverage. Question 8. Which of the following best describes the role of an endorsement or rider in a cyber insurance policy? A. They increase the maximum payout limit for claims related to cyber incidents. B. They allow the policyholder to add coverage for specific risks not included in the base policy. C. They change the base policy's exclusions to include additional risks. D. They reduce the overall premium cost for the insured. Answer: B. They allow the policyholder to add coverage for specific risks not included in the base policy. Explanation: endorsements or riders in cyber insurance policies are additional provisions that modify the coverage provided under the base policy. They allow policyholders to add specific coverage for risks that are not covered in the standard policy, such as coverage for emerging threats or more extensive business interruption. For example, an endorsement might be added to cover the costs of social engineering, fraud, or insider threats, which may not be included in the base policy. These additions do not typically change exclusions or reduce premiums, making options C and D incorrect. Question 9. Which of the following is most likely to be excluded from a cyber insurance policy covering a data breach incident involving personally identifiable information? A. Coverage for costs related to customer notification. B. Coverage for public relations efforts following the breach. C. Coverage for fines related to violating state-specific data breach laws. D. Coverage for legal defense costs in the event of a lawsuit. Answer: C. Coverage for fines related to violating state-specific data breach laws. Explanation: cyber insurance policies generally exclude coverage for fines and penalties that arise from regulatory violations, including those related to state-specific data breach laws. This is because such fines are considered the insured's responsibility for failing to comply with legal obligations. Coverage for customer notification costs Option A, public relations efforts Option B, and legal defense costs Option D are typically included in cyber insurance policies as they are necessary for managing the fallout from a breach. However, regulatory fines and penalties are usually excluded from coverage because they are punitive and not considered insurable losses under most policies. Question 10. Which of the following is a common factor that influences the premium pricing for a cyber insurance policy? A. The insured's history of regulatory compliance audits. B. The type of business and the amount of sensitive data handled. C. The insured's geographic location in relation to cyber risks. D. The number of employees in the organization. Answer: B. The type of business and the amount of sensitive data handled. Explanation: the type of business and the amount of sensitive data handled are among the most critical factors influencing the premium pricing for a cyber insurance policy. Businesses that handle a large volume of sensitive or personally identifiable information (PA) are considered higher risk and will generally face higher premiums. The insured's history of regulatory compliance audits Option A can impact underwriting but is less directly related to premium pricing than data sensitivity. Geographic location Option C and employee count Option D may also influence premiums but are less impactful than the nature of the business and the data it handles. Question 11. Which of the following best describes the concept of risk transfer in the context of cyber insurance? A. The insured is responsible for managing all cyber risks internally. B. The insurer takes on the full financial responsibility for all cyber threats faced by the insured. C. The insured transfers their cyber risk to the insurer by purchasing a cyber insurance policy, thereby shifting financial losses. D. The insurer provides risk mitigation services to reduce cyber threats, ensuring no need for a policyholder to transfer risks. Answer: C. The insured transfers their cyber risk to the insurer by purchasing a cyber insurance policy, thereby shifting financial losses. Explanation: risk transfer refers to the process of transferring the financial responsibility of certain risks to another party, such as an insurance company. In the case of cyber insurance, when an organization purchases a policy, it shifts the financial impact of covered cyber risks, such as data breaches or ransomware attacks, to the insurer. This allows the organization to manage the risk of cyber incidents more effectively by mitigating the financial burden. Option B is incorrect because insurers don't cover all cyber threats. They only cover specific types of risks defined in the policy. Question 12. Which of the following is a key difference between first-party and third-party cyber insurance coverage? A. First-party coverage covers liability claims filed against the insured, while third-party coverage covers the insured's own losses. B. First-party coverage covers the financial losses of the insured directly, while third-party coverage deals with claims made against the insured by third parties. C. First-party coverage focuses solely on regulatory fines, while third-party coverage handles data breaches. D. First-party coverage includes the costs of incident response teams, while third-party coverage includes the insured's legal defense costs. Answer: B. First-party coverage covers the financial losses of the insured directly, while third-party coverage deals with claims made against the insured by third parties. Explanation: first-party coverage provides protection for the insured's own financial losses due to cyber incidents. For example, it covers costs like business interruption, data restoration, and crisis management. In contrast, third-party coverage addresses the liability for claims made by external parties, such as customers or business partners, who are affected by the insured cyber event. This could include legal costs, settlements, and damages resulting from data breaches or privacy violations. Option A is incorrect as it misrepresents the coverage types, and options C and D focus on specifics that are covered under both types but do not describe the fundamental difference. Question 13. Mr. Anderson, the CEO of a retail company in Alaska learns that his company's customer database was compromised during a cyber attack. The attack involved the theft of personal information and payment card details. Mr. Anderson is concerned about the regulatory fines and legal action that may arise from the breach. Which of the following would most likely be covered under the company's cyber insurance policy? A. Regulatory fines and penalties for non-compliance with data protection laws. B. The cost of customer notification and identity theft protection services. C. The cost of rebuilding the compromised IT infrastructure. D. The cost of public relations efforts to manage the breach's reputation damage. Answer: B. The cost of customer notification and identity theft protection services. Explanation: most cyber insurance policies provide coverage for the costs associated with responding to a data breach, including customer notification and identity theft protection services. This helps mitigate the damage caused to affected individuals by offering credit monitoring or identity theft assistance. However, regulatory fines and penalties, option A, are typically excluded from coverage because they are seen as punitive and are the responsibility of the insured. The cost of rebuilding infrastructure, option C, is often covered under first-party coverage, but it is usually related to the repair of physical infrastructure rather than a cybersecurity breach. Public relations efforts, option D, may also be covered, but customer notification and protection are more directly related to the breach's immediate response. Question 14. Which of the following best describes how the NIST cybersecurity framework is used in the context of cyber insurance underwriting? A. It is a compliance requirement that insurers mandate for all policyholders. B. It provides a framework for businesses to enhance their physical security measures to reduce insurance premiums. C. It helps insurers assess the risk and cybersecurity posture of a potential policyholder influencing the underwriting process. D. It is a legal requirement for businesses to follow in order to qualify for cyber insurance coverage. Answer: C. It helps insurers assess the risk and cybersecurity posture of a potential policyholder influencing the underwriting process. Explanation: the NIST cybersecurity framework is used by businesses to assess and improve their cybersecurity risk management practices. In the context of cyber insurance, it serves as a tool for insurers to evaluate the effectiveness of a policyholder's cybersecurity posture. Insurers may offer lower premiums or more favorable terms to businesses that adhere to the NIST framework as it demonstrates a proactive approach to cybersecurity risk management. While it is widely recognized and recommended, it is not a compliance requirement for obtaining cyber insurance, option A, nor is it focused on physical security measures, option B. It is not legally required for coverage, option D, but it is highly regarded in underwriting assessments. Question 15. In the case of a ransomware attack on a business that results in a significant loss of data, which of the following cyber insurance policy features would most likely be utilized? A. Coverage for business interruption and lost revenue. B. Coverage for regulatory fines due to non-compliance with data protection regulations. C. Coverage for data recovery and restoration of lost files. D. Coverage for physical damage to office equipment due to the attack. Answer: C. Coverage for data recovery and restoration of lost files. Explanation: ransomware attacks often involve the encryption or theft of critical business data. Cyber insurance policies typically provide coverage for the costs associated with recovering and restoring lost or encrypted data, which can be a major expense in such incidents. Business interruption coverage, option A, may also apply, but the primary concern in a ransomware attack is the recovery of data. Regulatory fines, option B, are generally excluded from most policies as they are considered punitive and are the responsibility of the insured. Physical damage to office equipment, option D, is not typically covered under cyber insurance as the focus is on data and digital assets. Question 16. Which of the following is most likely to influence the underwriting of a cyber insurance policy for a small business in Alaska? A. The business's adherence to state-specific data breach laws. B. The business's investment in physical security measures such as surveillance cameras. C. The business's historical financial performance and profitability. D. The business's cybersecurity posture, including security measures and incident response plans. Answer: D. The business's cybersecurity posture, including security measures and incident response plans. Explanation: when underwriting a cyber insurance policy, insurers are primarily concerned with the business's cybersecurity posture. This includes the measures the business has implemented to protect against cyber threats such as firewalls, encryption, and incident response plans. Businesses that demonstrate a strong cybersecurity framework are considered low risk, and insurers may offer more favorable terms and low premiums. Adherence to state-specific data breach laws, option A, may influence compliance but is not the primary focus for underwriting. Physical security measures, option B, are less relevant in the context of cyber insurance and financial performance. Option C is not a direct consideration for cyber risk management. Question 17. Which of the following emerging cyber risks is most likely to lead to increased demand for cyber insurance coverage in the coming years? A. Increased reliance on legacy software systems. B. The growing frequency and sophistication of ransomware attacks. C. The decline in the number of insider threats. D. A decrease in the use of cloud computing platforms. Answer: B. The growing frequency and sophistication of ransomware attacks. Explanation: Ransomware attacks are one of the fastest growing cyber threats and have led to significant financial losses for businesses of all sizes. As these attacks become more sophisticated and frequent, the demand for cyber insurance is expected to rise. Insurance policies that cover the financial impact of ransomware, including ransom payments, data recovery, and business interruption, are becoming more critical. The reliance on legacy software systems, option A, and the decline in insider threats, option C, do not currently drive significant changes in the demand for cyber insurance. A decrease in cloud computing use, option D, is unlikely to occur as businesses continue to adopt cloud services. Question 18. Which of the following is typically considered an exclusion in a cyber insurance policy related to data breaches? A. Coverage for legal defense costs due to privacy violation lawsuits. B. Coverage for data loss caused by employee negligence or misconduct. C. Coverage for reputational damage and public relations costs. D. Coverage for lost business revenue during the period of a data breach. Answer: B. Coverage for data loss caused by employee negligence or misconduct. Explanation: Cyber insurance policies generally exclude coverage for losses caused by intentional acts, such as data breaches resulting from employee negligence or misconduct, while accidental breaches may be covered. Losses resulting from deliberate actions, such as an employee stealing data or failing to follow security protocols, are typically excluded. Coverage for legal defense costs, option A, reputational damage, option C, and lost business revenue, option D, are usually included as these represent direct consequences of a data breach and are important to address during the recovery process. Question 19. Which of the following cybersecurity measures is most likely to be emphasized by insurers when assessing a policyholder's eligibility for cyber insurance? A. Encryption of sensitive data both in transit and at rest. B. Use of physical barriers, such as fences and locked doors, to secure data centers. C. Regular employee training on customer service and sales techniques. D. Implementation of a fire suppression system in the office building. Answer A. Encryption of sensitive data, both in transit and at rest. Explanation: Insurers often assess a policyholder's cybersecurity measures to determine their risk level. One of the most critical measures is encryption of sensitive data, both while it is being transmitted across networks in transit and while it is stored on servers or databases at rest. This is considered an essential step in protecting sensitive information from unauthorized access or breaches. Physical security measures such as fences and locked doors, option B, are more related to overall security but not as directly relevant to cybersecurity risk. Employee training on customer service, option C, and fire suppression systems, option D, are not directly related to cybersecurity and therefore are not primary factors in the assessment. Question 20. Which of the following is a key reason why Alaska-based businesses should consider cyber insurance policy even if they already have strong cybersecurity measures in place? A. Cyber insurance can cover costs associated with insider threats that aren't addressed by preventive measures. B. Cyber insurance is mandated by state law for all businesses operating in Alaska. C. Cyber insurance can eliminate the risk of a data breach occurring. D. Cyber insurance can provide coverage for fines related to cybersecurity violations in Alaska. Answer A. Cyber insurance can cover costs associated with insider threats that aren't addressed by preventive measures. Explanation: Even with strong cybersecurity measures in place, businesses are still at risk from insider threats such as employees or contractors misusing their access to sensitive information. Cyber insurance can help cover the financial costs associated with such threats, including legal fees, data restoration, and business interruption. While having A policy does not eliminate the risk of a breach. Option C. It provides a safety net to address financial losses. Cyber insurance is not mandated by state law for all businesses in Alaska. Option B. And fines related to cyber security violations are generally not covered by cyber insurance. Option D. Question 21. Which of the following is an example of a cyber risk that may not be covered under a typical cyber insurance policy? A data breach caused by a hacker exploiting a vulnerability in the company's software. B. A denial of service attack that disrupts the company's website. C. Damage to physical assets such as computers or servers resulting from a natural disaster. D. Loss of reputation and business due to negative publicity following a cyber event. Answer: C. Damage to physical assets such as computers or servers resulting from a natural disaster. Explanation: cyber insurance policies typically cover incidents related to cybersecurity risks such as data breaches, ransomware attacks, and denial of service attacks. However, they generally do not cover damage to physical assets like computers or servers resulting from natural disasters, as this would fall under a general property insurance policy, while business interruption and reputational damage, options B and D, may be covered by cyber insurance policies. Damage to physical assets due to non-cyber causes, option C, is typically excluded from cyber coverage. Question 22. When an organization suffers a cyber attack that results in the theft of customer data, which of the following first-party coverage options would most likely apply to mitigate the costs of responding to the breach? A. Crisis management and public relations costs. B. Legal defense costs for defending the company against a third-party lawsuit. C. Business interruption due to a compromised network. D. All of the above. Answer: D. All of the above. Explanation: first-party coverage is designed to protect the insured organization from its own financial losses due to a cyber event. In the case of a data breach, several first-party coverage options would apply. Crisis management and public relations costs, option A, help the company manage the aftermath of the breach and communicate with affected customers. Legal defense costs, option B, may be necessary if the company faces lawsuits from third parties. Business interruption coverage, option C, applies if the company's operations are disrupted due to the cyber attack. Therefore, all of these coverage options are relevant to mitigate the cost of responding to a data breach. Question 23. Which of the following best defines the term cyber extortion as it relates to cyber insurance? A. A type of data breach where customer information is stolen and sold to competitors. B. A situation where cyber criminals demand payment to stop a cyber attack, such as ransomware. C. An incident where an employee intentionally damages the company's computer network. D. The process of obtaining cyber insurance coverage after a security breach occurs. Answer: B. A situation where cyber criminals demand payment to stop a cyber attack, such as ransomware. Explanation: cyber extortion refers to situations where cyber criminals demand payment, typically in the form of cryptocurrency, to stop a cyber attack or prevent the release of sensitive data. A common example of this is ransomware, where attackers encrypt a company's data and demand a ransom for decryption keys. Option A describes a data breach but not cyber extortion. Option C refers to an insider threat, which is different from cyber extortion. Option D is unrelated, as it describes the post-breach process rather than the nature of cyber extortion. Question 24. Which of the following is most likely to be excluded from a standard cyber insurance policy? A. Loss of income due to system downtime following a cyber attack. B. Costs associated with restoring lost or corrupted data due to a cyber breach. C. Financial loss due to a natural disaster that impacts the company's physical infrastructure. D. Expenses for public relations and crisis management following a cyber incident. Answer: C. Financial loss due to a natural disaster that impacts the company's physical infrastructure. Explanation: cyber insurance typically covers financial losses arising from cyber events such as system downtime, data loss, and reputational damage after a breach. However, it generally does not cover losses caused by natural disasters affecting physical infrastructure. For those types of losses, a general property insurance policy would be more appropriate. Loss of income due to downtime, option A. Restoring lost data, option B. And crisis management expenses, option D, are typically covered by cyber insurance policies. Question 25. Which of the following is the primary role of cybersecurity audits in the underwriting process of cyber insurance? A. To assess the cost of premiums for the policyholder. B. To evaluate the cybersecurity posture of the applicant and identify potential vulnerabilities. C. To assess the amount of coverage needed based on previous claims data. D. To identify specific policy exclusions based on industry regulations. Answer: B. To evaluate the cybersecurity posture of the applicant and identify potential vulnerabilities. Explanation: cybersecurity audits are used during the underwriting process to assess an applicant's overall cybersecurity posture, identifying potential vulnerabilities or weaknesses in their systems. This helps insurers evaluate the risk level and determine appropriate coverage options and premiums. While premiums are influenced by the audit, Option A: the primary purpose is to evaluate the cybersecurity measures in place, not the claims history. Option C, or exclusions. Option D. Question 26. Mr. Thomas, the CEO of a mid-sized tech company in Alaska, is reviewing his company's cyber insurance policy after a recent ransomware attack. The policy includes coverage for first-party losses and third-party liabilities. Which of the following scenarios would most likely trigger a claim under the company's first-party coverage? A. The company is sued by a client whose personal data was stolen during the breach. B. The company's website is taken offline by a denial-of-service attack. C. The company must hire a public relations firm to handle the negative media coverage from the breach. D. The company's network is encrypted and it must pay a ransom to regain access to its data. Answer: D. The company's network is encrypted and it must pay a ransom to regain access to its data. Explanation: first-party coverage typically covers the insured organization's own financial losses due to a cyber event, in this case paying a ransom to regain access to encrypted data. Option D is a typical first-party claim as the company is directly impacted by the cyber attack. Option A would likely fall under third-party liability coverage as it pertains to a lawsuit from a client. Option B is a denial-of-service attack, which may trigger business interruption claims under first-party coverage, but it is less direct than the ransom scenario. Option C is a crisis management cost that may also be covered by first-party coverage, but it is not as directly related to the breach's financial impact as the ransom. Question 27. Which of the following is a key advantage of having cyber insurance for small businesses in Alaska? A. Cyber insurance guarantees the business will never experience a data breach. B. Cyber insurance helps cover the costs of recovering from a cyber incident, including data restoration and business interruption. C. Cyber insurance is mandated by law for all businesses in Alaska. D. Cyber insurance covers the cost of upgrading outdated hardware and software systems. Answer: B. Cyber insurance helps cover the costs of recovering from a cyber incident, including data restoration and business interruption. Explanation: the primary benefit of cyber insurance for small businesses is its ability to cover the significant financial costs associated with a cyber incident, such as data restoration, business interruption, and crisis management. It does not guarantee that a data breach will not occur. Option A. Cyber insurance is not mandated by law in Alaska. Option C. And while some cyber insurance policies may include services related to system recovery, upgrading hardware and software typically falls outside of the policy's scope. Option D. Question 28. Which of the following best describes the purpose of endorsements or riders in a cyber insurance policy? A. To provide coverage for risks that are excluded from the standard policy. B. To reduce the premiums for high-risk policyholders. C. To provide coverage for physical assets, such as office equipment. D. To define the legal jurisdiction under which any disputes will be resolved. Answer A. To provide coverage for risks that are excluded from the standard policy. Explanation: endorsements or riders are used to modify a standard cyber insurance policy by adding coverage for specific risks or incidents that may be excluded under the base policy. This allows policyholders to tailor their coverage to their unique needs, especially in cases where certain risks, such as specific cyber threats or incidents, are excluded. Reducing premiums. Option B. And providing coverage for physical assets. Option C. And not the primary purposes of endorsements. Jurisdictional provisions. Option D. Are typically found in the policy's main terms, not in endorsements. Question 29. Which of the following regulatory frameworks is commonly referenced by insurers when assessing a policyholder's cybersecurity practices for compliance with industry standards? A. Federal Insurance Office (FIO) guidelines. B. NIST Cybersecurity Framework. C. National Fire Protection Association (NFPA) standards. D. Fair Credit Reporting Act of CRA. Answer: B. NIST Cybersecurity Framework. Explanation. The NIST Cybersecurity Framework is a widely recognized set of guidelines and best practices for managing cybersecurity risks. Insurers often refer to it when assessing the cybersecurity posture of a policyholder to determine if their systems are adequately protected. The Federal Insurance Office (FIO) guidelines, Option A, relate more to overall insurance regulation rather than cybersecurity. The NFPA standards, Option C, apply to fire safety, not cybersecurity, and the FCI, Option D, deals with consumer credit reporting, not cybersecurity. Question 30. Which of the following is typically NOT covered under cyber insurance policy's business interruption clause? A. Loss of income due to a website outage caused by a cyber attack. B. Expenses for employees to work from home during a network breach. C. Costs of repairing or replacing compromised physical equipment. D. Loss of revenue due to an employee's accidental deletion of critical data. Answer. C. Costs of repairing or replacing compromised physical equipment. Explanation. Business interruption coverage generally covers losses due to disruptions in operations caused by a cyber event, such as a website outage, Option A, or the need for employees to work remotely, Option B. It may also cover lost revenue due to a breach that prevents normal business activities. However, the costs of repairing or replacing physical equipment, Option C, are typically covered under a property insurance policy, not a cyber insurance policy. Option D may be covered under a cyber policy if the loss is related to data loss from a cyber attack, but accidental deletion by an employee would likely fall under other types of coverage.